Well, we continue our story of P2 corporate reporting with some recordings on foreign currency translation. I'm sure you've guessed, because we're right at the beginning of the course and we're in the groups section of the course, that what I'm looking at is foreign subsidiaries. The reason that I'm looking to my left here all the time, I probably look like I've got shifty eyes, is because I've got my notes here. There's two things that I want to talk to you about, and one is certainly bigger than the other by some way. The two things that one needs to consider in the context of foreign currency translation is foreign transactions and foreign subsidiaries. Frankly, both of them are extremely easy on their own. You do the totally, completely obvious with foreign transactions. What you do with foreign transactions is you turn them into your home currency. Easy peasy. What about a foreign subsidiary? What you do with a foreign subsidiary is you turn that foreign subsidiary into your home currency before you add across. Easy peasy. In fact, actually, from a modern management perspective, what you usually do, if you can, ideally, is you tell them to turn their FS into your currency for you. Rather than you doing it for them, they do it for themselves. So they should be producing their FS in their own currency and then representing their own FS in your currency to help us with the process of consolidation. It's really, it's a funny subject, foreign currency, because it's a mixture of the ridiculously easy and the ridiculously difficult. There's no middle ground in this subject. I would say 9/10 of it is a piece of cake, and the other 1/10 is near impossible. It's quite extreme in its differential between the easy and the difficult. It's very extreme. So the way it's going to break down is there's going to be 3 recordings. This little introduction plus in this particular recording I'm going to be working my way through various foreign transactions and showing how you account for foreign transactions. And then in another recording I'm going to do a foreign subsidiary, and then in the final recording I'm going to bring them both together. The difficult thing with this subject matter is when you have a parent and a foreign subsidiary, and then the parent and the foreign subsidiary start trading with one another. The truth is, when you look at P3, you often have a look at this idea called vertical integration, where you buy your own supplier or you buy your own customer, in which case, inevitably, a parent is going to be trading with its subsidiary. Now, if the parent is in one country with one currency, and the subsidiary is in another country with a different currency, then not only do you have the complication of consolidating 2 entities that are recording in different currencies, but you also have the complication of the parent trading with a foreigner and the subsidiary trading with the foreigner. Of course, from the parental point of view, the subsidiary is a foreigner, but from the subsidiary point of view, the parent is a foreigner. Oh, it all gets very messy, actually. So that's the basis of the 3 recordings. This recording number 1, is an introduction, as you can tell, plus looking at foreign transactions. The next recording is just looking at foreign subsidiary on its own in isolation. And then the final recording is looking at what happens in the exam when the 2 get mixed together. Okay? Lovely. Okay, so how do you deal with foreign transactions? Well, foreign transactions are translated into the home currency, and foreign monetary items are retranslated at the year end. That's right. Foreign transactions are translated into the home currency, and foreign monetary items are retranslated at the year end, which sounds terribly technical, but actually is quite intuitive. And rather than spending a lot of time sort of, blinding you with the science in terms of words, it's much more comfortable if you have a look at a couple of examples and then you get a feel for it. These examples, although they are not particularly difficult, are in fact as difficult as this subject can get on its own in isolation. When it's on its own, it's a piece of cake, as you will see. The three questions are furtive, feature, and feature continued. And I'm going to work my way through them now. So, let me get a little title up for you. Is this recording? Yep, it's recording. So, the title I'm going to give you is Foreign Transactions. Foreign transactions. And the example that I'm going to start with is the rather lovely question, furtive. Let me have a look at furtive myself. Have I got a calculator? Yep, I have. Good. A company buys a machine on 3 months' credit from France for €50,000 just before the year end of the 31st of the 12th. It takes delivery on the 15th of the 12th. The rates are as follows. Delivery rate is $1 to $1.25, and the year-end rate is $1 to $1.30. So obviously the value of the liability changes. I say obviously, but it may not be obvious what's going on until you've actually seen one of these and, you do another one. Excuse me. Right, okay. Here we go. What we do first is a thing called a Forex table. It's a lovely little fella. You measure the liability in the original currency, and then you use a rate to get it into your home currency, which in the P2 examination is the dollar, of course. So a company buys a machine on 3 months' credit. If we're buying and taking credit, then we end up with a liability, of course, a trade creditor. But we'll also end up with a foreign trade creditor. And of course the value of that trade creditor will go up or down depending on the currency. So even though we may not mean it, we'll end up speculating on foreign currency. We'll end up speculating on the value of the euro. That's what happens. And the effect of it in this particular case is the following. We have a delivery liability of what? €50,000. And we have a year-end liability of €50,000. And the amount of euros that we owe does not change over those 2 weeks. But the feel of the liability changes because we think in dollars, we don't think in euros. So the liability is actually €50,000. But to us it feels like €50,000 divided by 1.25. And then later divided by 1.3. And like I say, it's a good job I've got my calculator on me, because I suppose I could do that one. That's 40,000, isn't it? So 50,000 divided by 1.25 is indeed 40,000. So at the year end we owe $40,000. Are you any good with figuring out which one you divide by and which one you multiply by? I find it a bit tricky as well. The examiner's quite forgiving when it comes to getting things the wrong way up, but obviously he has to knock off one method mark. But if you look at the rate, can you see that $1 is worth more than the euro? So you're expecting a smaller number of dollars because the dollar is more valuable. Okay? So that's how you work that out. So at the year end we still owe 50,000, but we're now divided by 1.3, and that ends up with less. So 38,462, I suppose, minus 40,000 gives 1538. And that's actually a Forex gain. May not be immediately obvious to you, but when you think about it, it should be. a forex gain. You see, the thing is that we still owe 50,000 euros, but the liability feels smaller to us at the year end because of the movement in the currency. And when a liability feels smaller, you make a gain. This thing here that I've just whacked out is called the forex table. What's actually required is the journals, so we'll give the journals. The examiner often communicates this using journals. That's why I've asked for journals. So we've got a delivery. A delivery journal. Debit and credit. So we've got 40,000 and 40,000. We've got a debit to non-current assets or property, plant and equipment, PPE cost. It was PPE, wasn't it? Company buys a machine, yes, it was PPE. And we've got a trade payable, or just a payable if you like, or even a creditor. Doesn't really matter what you call it, as long as you communicate the idea. And then the year-end journal, we want to make the trade payable smaller. I miss having lines, actually. It's much easier writing on the computer when you've got lines, but it doesn't look so good on the screen, you see. So we want to make this trade payable smaller, don't we? And trade payable is, of course, a credit entry, and to make a credit entry smaller, we debit the credit. So we're going to put in a debit there. So debit trade payable. And the figure is 1538. So we have 1538 going to the P or L, as they call it, profit or loss, or income statement if you prefer. Either phrase is absolutely fine. And that goes into financing because it's what's speculating. It's considered a speculating gain in this case. Can you see it's a credit entry? Credit entries are, when they go to the P&L, when they go to the income statement, are of course gains. So you've got a gain going in financing of 1538. That's it. I told you there wasn't much to it, didn't I? So let's do it again, just to, what's the word, to consolidate our understanding. Okay, here we go. Feature is the question. A company buys a fixed asset on 3 months' credit 2 weeks before the year end for 90,000 rubles. Rates are as follows. So there you go for the table for this transaction. Just read it back to you and just summarise what we've got up there. A company buys a fixed asset on 3 months' credit and therefore it takes on a liability. The liability is in rubles and the amount of rubles remains constant. But the feel of those rubles goes up or down, in this case up, because of a change in the rate. $1 is 10 rubles, and therefore the dollar is worth a lot more than rubles. 90,000 rubles felt like $9,000 at the point of delivery. And if we'd paid in cash, we would have paid $9,000. But we chose not to. We chose to take the credit. And we lost out. We speculated in rubles and we lost out because now the liability feels like $10,000. It's not actually $10,000, it's still 90,000 rubles, but it feels like $10,000. And therefore we've made a forex loss of 1,000. So what am I doing here? Delivery journal. Just change the words just to show you it doesn't matter. Should we call it NCA? Non-current asset. Figures 9,000. Should we call it a creditor? Just to show that the words don't matter. 9,000. So that's the delivery journal. Year-end journal. We've got to make the creditor bigger, so we've got to credit the creditor by 1,000, and therefore we have a corresponding debit in the income statement, or the P&L as it's often called, and that goes into financing, or finance if you prefer, on the income statement. The reason I had a big pregnant pause in the middle there is I was trying to think of the sort of questions that students ask me when they're live in the classroom. Some of them don't, some of them are fine with this, and that's the end of the lecture. But occasionally students ask me, does that really go to the income statement? The answer is yes, it does go to the income statement. The IAS says it must go to the income statement, so it does go to the income statement, and therefore effectively it's deemed realised by the IAS. But don't use that word realised. It must go to the income statement. That's the key issue that the IAS actually says. Okay? Another question that students ask is, okay Martin, that was really easy, but you've only told me half the story. What happens next year? It's a good question, isn't it? So, what happens next year is the nature of feature continued. Let's have a look at feature continued. The company pays the creditor on schedule in the new year. If I was the examiner, then I would be examining this on a regular basis, but fun enough, your examiner has never showed any interest in doing doing the new year. He always does like the year end and then leaves it, like we have here. But it's possible, isn't it, that he could examine the new year? So let's have a look at what happens in the new year. So question, feature, continued. Whoops, continued. We still owe rubles. There's still a rate. And there's still dollars. What was the year end becomes the year start. And we still owe 90,000. And at settlement, or payment as they've called it, we have a liability of 90,000 which is paid at that point. The rate is 9 and 9.2. We know what that is, that's 10,000, isn't it? And this figure, I can't do in my head, obviously. 90,000 divided by 9.2 is 9783. 9783. I'm not used to using a calculator. I normally get the students to do it. I normally get you guys to do it, but unfortunately you're not here, so I have to do it myself. That's a 4x gain, right? What's the difference? Minus 10,000. 217. 217. Lovely. And is it a gain? Have I said that right? The liability shrinks and we make a gain. Good. We don't have to get the year start figure into our books. It would already be in our books as the opening balance from last year's closing balance. So all we need is the adjustment. The closing journal or the payment journal or the settlement journal, whatever you want to call it. Some people like to have just one journal, and it works really well with just one journal. I prefer slightly to have two journals. You might not like it, but it's the way that it seems to work in my head. So, first of all, what I like to do is I like to take the liability and knock 217 off it because it shrinks, and then I like to pay it off down to 0, so I do it in 2 steps. So I need to make the liability smaller, so I'm going to debit the creditor. Debit the creditor with 217, and therefore credit financing in the profit or loss, as they seem to be calling the income statement at the moment. And then that leaves me with a figure of whatever that was, 9 something, 9783. And 9783 is the clearance of the remaining creditor. And of course 9783 is the amount of dollars I need to pay off the 90,000 rubles, and therefore that's the amount of cash flowing out of the bank. There you go. I know what you're thinking. You're thinking, my goodness, this is ridiculously easy. You wait. It's a funny thing. Foreign currency is, like I say, it's a mixture of the ridiculously easy and the ridiculously difficult. Just when you're doing individual transactions, it's so easy. But when you start to mix it up and really go for it, it gets pretty full on. It really does. And many of you will know this from your own workplace practice. When you actually start to deal with foreign currency and people start making mistakes and things end up back to front and inside out, it gets really tricky. So watch out for recording 3 in this section on foreign translation, because it really does get tricky for that recording. I'm happy enough with that now. That's my introduction, plus a look at foreign transactions. So that's foreign transactions. The next recording is foreign subsidiaries.